If you own a home, then over the last couple of years, you've more than likely seen your home value increase. This increase means that you have more equity in your home, and many may be wondering, how do you tap into that home equity? Well, let's back up for just a minute. So what is home equity? Home equity is the difference between that new value on your home through appreciation versus your loan balance. So it's the difference between those two. So of course, as the appreciation rates go up, the home values go up, your equity is growing as well. So now back to the question, how do you tap into that equity? Is that even an option? And the answer is yes. The strategy is through a home equity line of credit or a home equity loan. And we're going to talk about that here right now. Before we get into that, hit the subscribe button and click that notification bell so you can keep up with me and make your home buying journey a breeze. Over the last 25 years, I've helped thousands of people finance their home, refinance their home, buy second homes and investment properties, and accomplish tapping into their home equity. So let's talk about how you can go about doing that and what it looks like and how you might use those dollars. So what is a home equity loan or home equity line of credit? It is a standalone loan that is separate from your primary mortgage. So if you have one of those great 3% rates, you get to keep it. You're going to leave it completely intact, exactly the way it is. The home equity line of credit or home equity loan will be a second lien against your property. So a second payment that you're going to be making, and it taps into that equity that is in the walls of your house. So how do we know how much equity you have? Well, that gets determined by an appraiser. They're going to come out and appraise your property very much like they did when you bought the property. They'll render a value, and then from that, we have to apply any loans that are outstanding on that, and what's remaining is your equity. In the state of Texas, you can tap into 80% of that, 80% of your home's value. So you take the value by the appraiser times 80%, subtract your existing loan, your existing primary mortgage, and the dollars left are what you can take out in a home equity loan or a home equity line of credit. So how do you go about getting a home equity loan or line of credit? Well, you do it very much the same way as you did when you bought your home. You go through a local lender. They will take a loan application from you. They'll order an appraisal to determine the value. They'll collect some additional documentation from you and proceed just the same way as you did when you bought your home. Now, like I mentioned, if you're in the state of Texas, we are restricted to a total of 80% borrowed against that appraised value. With a HELOC, there's two different ways to go about it. There is the loan, which is a fixed payment, fixed interest rate over time, just like your first mortgage. And then there's the line of credit. The line of credit can be utilized two different ways. You can either take the lump sum at closing, or it can be set up kind of like a credit card. So it's truly a line of credit. The credit amount is established at the beginning. So let's say it's $50,000. So now you have a $50,000 line of credit, and you can draw down on it as needed over the time. And you're only paying interest on the amount that you've drawn down. So if you have that $50,000 line of credit, you take $10,000 out to do some home renovations. Now you're paying interest only on the $10,000 that's used. Conversely, if you take out the lump sum, you are paying interest on the total amount of dollars that you took with that lump sum. You may be wondering if there are any restrictions on how you use the money once you take out a HELOC, and the answer is no. You can use it for any purpose you desire. The most common reason people have taken them out is for home improvements. A lot of people want to fix up their kitchen, their bathrooms. They may have some major appliances that need to be replaced, maybe an air conditioning or something like that. But they're using it for home improvements around the home. The other common way that people tap into their equity is for debt consolidation. Now, if you've opened your credit card statement lately and actually looked at the fine print to see what kind of interest rates, you know that they are through the roof. interest rates are crazy right now on credit cards because they're tied to the prime rate, which is tied to the Fed funds rate, which the Federal Reserve has been moving higher and higher the last couple of years. So the average credit card rate right now is over 20%. So a lot of people are taking advantage of the lower interest rate environment for a mortgage or a home loan or a HELOC, and they're using those dollars to pay off that high interest rate debt. Now, one of the most favorite ways that I see people tap into their equity and repurpose it is in purchasing more real estate. I've seen people tap into their equity and go buy several homes and start building an investment portfolio or add to an existing investment portfolio. Now you may be wondering, like, that doesn't necessarily make sense. Well, think of real estate. Remember, it's an asset. And if it's an asset that's put to work, it's a rental property, it's now returning an income to you. It's cash flowing. So now the money is actually working for you and putting money back in your pocket. Not only that, is it gives you some tax advantages that you may not have otherwise. And the last way that I see people tap into their equity and then repurpose it, and I think this is kind of sexy, is they use it in their businesses. And maybe it's starting a new business, but most often I see them use it in an existing business they own. And they use it to take their business to the next level, whether that's through buying more equipment, hiring more people, adding more products, expanding in more areas, more locations. But whatever they do, they're putting that money in the business, and then that money is going to work for them to produce more revenue. So those are a few ways that I see people use their equity in such a smart way. And as we saw with those last two examples, they're actually putting that money to work for them so that it gives them back even more money. Home equity loan may or may not be right for you, but what I recommend is to sit down with your mortgage professional, and you should do this every year, and have a complete mortgage review. And then talk about what your current needs are, whether it's paying off credit card debt and seeing if the numbers make sense to do that, or maybe it's a cash infusion, or maybe you want to build that investment portfolio. Meet with your mortgage professional. They can help you work through the numbers to make sure that it is a wise decision for you. And if you want to make your home buying journey a breeze, be sure to hit the subscribe button and the notification bell, and check out below for a link to my home buying guide.